So hi traders, welcome back to the 31st episode of the Forex market breakdowns. So for the last 3 or 4 weeks, you have not seen me doing any of the videos, you have not seen me post anything on YouTube. I've been busy doing other things and we decided to switch roles with Caleb. So Caleb was to handle what I was doing normally, the videos, and I was doing the other things. But now I'll be doing videos and he'll also be doing videos. So we'll just juggle between us and the guys we work with. So before we even go down to the technical breakdowns, we have some few things we want to tell you. So for those who are interested in learning, anyone who's been commenting on our site, you want training, anyone who's been following us and have been interested in learning what we do, you're all aware that what we offer you on our YouTube channel is just the tip of the iceberg of what you need to really become good at trading. So yeah, the course is now out. So this is a sample of the book. Caleb told you sometimes earlier that the books were out, and now these are the books. So if you purchase the course, you get this book. You can read it 3, 4, 5, 6 times, and once you assimilate the information that is in here, I think you'll be good for trading generally, and you'll be able to understand at least the forex market and to generate some money. So besides that, so if you want to purchase the course, you can. This is actually the platform for the videos. So we have a book and we also have some videos, and more on this will actually be given on our site. So we'll drop a link below where you can go and check out the different course packages we have and how you can buy them and what you'll get after you buy them and the topics that you have covered. Everything we've tried to make it as transparent and as open as possible, unlike most people who think that by showing out the content that you're sharing, people may baby copy or some things of the sort. We don't believe in that. We believe even if you watch Kung Fu movies, it doesn't mean you know how to fight. You have to go for some training from Bruce Lee to be able to fight. So these are the videos we have. We have over 80 videos, and basically on the videos, instead of now doing the technical breakdowns like we do on YouTube, now here we tackle each and every tool. So what you get on YouTube is just a brief summary of what I've been able to come up after looking at various tools, and we show you how we use the various tools, how we generate ideas, all the way to the conclusion of how we make a trade decision. So that's basically now about the course packages. Another thing that I'll talk about is next month from 5th to 7th, we'll be having another boot camp, or rather a forex trading masterclass. We decided to change the name from boot camps to forex trading masterclass. So the masterclass will come in because most of you have been asking us when is the next one, after we had the last one, which was at least 3 months ago. So that first one was like a pilot for us. We love testing things, and basically markets and trading, it's about testing your ideas. Entrepreneurship is about having an idea and executing it. So for us, executing and forming things, we're not theories. We don't believe in theories, we believe in practicalities. And in the market, we are not monetary policy makers, neither academics who believe in behavioral finance and all that. For us, it's about practicing what you do, and you have to feel the pain of doing. So there are different things about being a trader and being on the other side of the markets. So those are 2 things that I wanted to talk about, and that is basically about the course. Another thing is we have introduced a new we normally have a free ebook, and most of you have gone through the ebook, and most of you even actually found out about us through the ebook. And now we have officially added a link to our website where you can download the ebook and read it. Basically, if you're interested in learning and you're new and you don't have anything and you don't have the money, we've decided to give you that ebook for free. The purpose of the ebook is to guide you into understanding basically how to go about trading. And so even if you decide to do the research on your own, then probably you can be able to come up with ideas, having a framework to work from rather than just looking from everywhere. So we decided to give you a framework to work with. So now you can get the ebook on our site, and we also have WhatsApp groups and Telegram groups. All those links will be dropped below. If there's anything I've forgotten, probably you'll just check the comments when you upload the video. Maybe I'll add something down there. So that's basically what we wanted to talk about. And now we'll just go straight into the markets. So markets have been moving. We have some beautiful setups, and we hope you guys always make money as we do, because we'll also start sharing our live trading. And like we had decided, when we launch the course, that's when we'll make our accounts public. So there are some skeptical people, which is allowed to be. It's allowed to be skeptical about some things, and most of them have been asking us, do you have my FX book accounts? Have you linked your account where we can check your performance and such things. And since we believe in transparency and we do know that we make money doing this, we will take that step, and probably in the next 2, 3, 4 months we'll give out our accounts, and you'll be able to track and see how we make money and how we handle losses, because they're always there, and how we handle wins, and basically everything, the ups and downs of the markets, and how you are able to end up making money after a long period, because that's the basic goal. The goal is not to make money daily, it's to make money at the end of the month, at the end of the week, at the end of the year. So that's basically it, and I'll just do 5 or 6 breakdowns and we'll be done for the day. But if you're interested in any of this, please don't hesitate to call us, or to ask a question, or to drop a link. We also have a community blog that we have decided to allow people to share their content. So if you've been watching our videos and you feel like you have an article that you want people to see, you have a video that you want people to see, but probably right now we're only taking articles, let me not just put in the video. So we have articles. So if you have a technical breakdown, if you have a psychology article, if you have an article on history of markets, if you have an article on the fundamentals and you want people to see it, send it to us. We'll post it to our site. We have a section on the community blog, and people will be able to see we'll even drop your email. You just drop us your contacts, and if anyone is interested in meeting you, then you'll meet and maybe talk about markets. And if we're also interested in seeing who has written such a beautiful piece, then maybe we'll also look forward to meeting you, because the goal is always to build a community of traders. For us, it's not about us only, it's about the community and growing together. It's not about individuals but the community. So that's basically it, and I think now from that I'll just go down to the technical breakdowns and we'll be done for the day. So this is oil, and I'll start off from the weekly chart as usual. I won't go to the monthly chart. I believe you guys, if you use the monthly chart, know how to use it. So I'll start off oil from the weekly chart. For a long time, for a very long time, personally I've been short on oil. I've been looking for a move. I've been looking for this move to drop all the way to the $35 mark. So I'm looking for this long move to $35. You can see for almost 8 weeks the markets have been consolidating between 54 and 57.5. Then we had this sharp move which was caused by the oil price shock, which happened about a month ago, and after Saudis announced that they'll be bringing back oil to the market in no time, then we saw the market start collapsing all the way from 63, and now we are currently trading at 52.45, having broken past the 54.5 mark or the 53.5 mark, which acted as a good support level for a very long time. Oil, for my experience with what I've been doing for the last 3 years, I know oil, if it starts moving, it can move in one direction for a very long time, which happens in commodities. Unlike currencies where you can buy pullbacks, with oil, once the trend develops, I don't try and look for pullbacks, especially where I don't see one. So for now, I'm short on oil. I won't even give you a bias on long. I'm short on oil. I expect it to move lower, at least first to 48.5, second to 47.5, 45, and then $40 mark ultimately. If we break past the $40 mark, we could maybe go to 35, but I don't see how that will happen in a straight leg anyway. We'll probably get some pullbacks along the way. So that's my bias on oil on the daily chart, on the weekly chart, I mean. And if I just draw a line, an arrow to show you the direction, then that is the direction. I expect it to sink lower all the way to $35 mark. Looking at it historically, oil always precedes a recession, and I think the current market cycle is pointing out to a recession in the United States, and I think oil is doing what it normally does. It precedes the recession, and that is what is happening. So if I come to the daily chart, I've been moving lower with it for quite some time now, and I'm still in these trades. But I try, and after this oil shock, I lost some big money in this oil shock, and so I decided from then I won't be holding during the weekends. It's not a good remedy, because such things only happen once or twice, but I think the current environment has a lot of geopolitics, and I don't want to be caught up in that. So yesterday we had this move upwards, and S1 acted as a good level. So you can see we rejected S1, closing as a shooting star, and I expect it to continue sinking lower. So the first target for this move lower is the $50 mark, and then ultimately I'll be looking for 48.5, but I don't think we'll bypass the $50 mark or the $48.5 mark without a correction. This is a big drop all the way from 63 currently to 52, so that's 1,000 pips drop in just less than a month. I don't think it will continue past 48 or 47.5, but if it continues, who am I? I'll just follow the trend. So the 4-hour chart, the same is happening, but on the 4-hour chart it's now clear this was just a pullback. And if you use your Fibonacci from the prior lower, from the prior higher low, I mean, so if I just plot my Fibonacci from that point to this point, then 78.6, you can see acted as a good level, and now you can see we have this continuation all the way to S2. So I came in yesterday after we rejected this P. I probably expected a pullback, but immediately we rejected P. I knew there was no pullback. I came in and I actually shared this trade with some of the people in our groups, and now the markets have moved low at least 100 points, and I'm looking forward to a move at least to $50, which will be a 300-point move. Not a bad move when you're risking 100 points. So 1 is to 2.5. So that's my outlook on oil generally, and I'll just go down to the next pair, gold. So the next pair I'll look at is gold, and for gold I'll also start from the weekly chart. I love looking at the weekly chart, and on the weekly chart you can see gold has been on a strong bullish move, breaking past 1360 after consolidating for a very long time. We've covered that in other videos, and if you're interested in understanding the whole move, we actually predicted this move upwards to 1550. Turns out we were right, and now you can see we have at least 4 weeks of consolidation. So for me, the rejection of 1550 was the beginning of a correction to this move, and last week we had this hammer closing, and I still expected it to move lower, but you can see we are rejecting the R3 mark, the 1476, and with this hammer, maybe we could see some bullish momentum pushing us past 1550. So clearly from my tone you can tell that I have no clear sense of direction based on this weekly chart. So I'm still sitting on my hands, I'm waiting, but I'm favoring a correction to the downside. I think this is a strong bullish move which will at least deserve a correction to 1450, 1440, 1435 ultimately before we begin the bull move. And I think the dollar is also strong, so fundamentals also point to probably a weaker gold. But looking at it from the daily perspective, which makes it easier for me to make a decision, then you can see the bounces that I've been talking about. So we had this first drop, then we had a correction, the second drop, and now we had a correction. And yesterday we had this beautiful formation of a bearish signal. It's called a 3-pin pattern, and the market started moving lower. So I had actually come in for a short at 1490, and unfortunately you can see the markets have opened today higher, and as the markets have opened higher, I've also gotten some news that the trade war has also, we can also see that probably the trade talks won't succeed because the US has attacked some Chinese companies. So I'm deciding to believe that could be the reason why we may see a stronger move on gold, but I don't think I'll conclude we'll be in a bullish move unless we break past 1530. So unless we take out this prior higher low, which I'll highlight, this prior lower high, which I'll highlight using this, then I don't think I won't be using my money to bet on a long position. So I'm currently out. I'm waiting for the markets to develop something that I expect. But if we are unable to close above the 1505 mark, which you can see is here, 1505, 1510, 1515, 1520, I'm giving it probably 150 pips because of the volatility on gold, then I'm still short, and I expect this market to sink lower to 1450. I've actually sent an article out today giving the move to 1450 and 1435, and that's what I'm watching on gold. On the 4-hour chart, this is the 4-hour chart for me. Yeah, and you can see clearly, you can see I had executed a position, and my stop losses are quite high, so they have not yet been gotten to, but I expected this to move at least to touch R1, which would mark the third touch of this line. Then probably we'd get a slide lower, and we'll also squeeze some shots at this point, but we never got that move, and I think we may not even get the move to 1510, but I don't want to conclude. You don't trade what you think, you trade what you see. From my analysis of the markets currently, I don't see any short position, so probably we'll get a move to R1, 1517, 1515. If we get a good short signal, then I'll be looking for that move, which is a better selling point rather than this, and that's why I exited this trade. So the next pair I'll do, this is not a pair actually, it's a currency. So this is a dollar index, so it's an index that compares to the other currencies. So it compares the dollar to a basket of other currencies, not the euro, not only euro, GBP, USD, Japanese yen, several currencies all compared to the dollar. So this is the value of the dollar to the basket of several currencies. And if I look at it from a weekly perspective, I think this is in fact one of the best trades that I'm currently looking for. And it's taken quite some time to play out as we expected, and we also had to change some of the things that we expected, which is normal in the markets, but for those who are new, it may be challenging to understand some of these things. So fundamentals are pointing to a weaker dollar. We've gotten 2 rate cuts. We also have a slowing down of the global economy. But looking at it, you can see clearly that over the last probably 2 years, all the way from 2018, and now we're heading into 2020, the dollar has been trading between 88, and we've had this bull move all the way to, we're now approaching the $100 mark. So just like I've mapped on this weekly chart, so this is 1, 2, 3, 4, 5. For those who know the Elliott wave theory, there's the last Elliott wave pattern which develops before we get a reversal or a change in trend direction. And I suspect that this pattern may be the one that we're talking about. So if this is that pattern, then this will act as wave 1, 1, 2, 3, 4, 5. And this Elliott also has some different patterns. So the third wave is now not allowed to be the strongest, and several other rules which I'll not go into right now. So basically I'm looking for this index to at least touch 100, 100.5, 100 or 100.5, but I don't think we'll bypass 100 or 100.5. Once we get to the R2 level and we reject this level sharply, then I'll be looking for a short trade, taking out this 88, moving lower all the way to 84, 83, 80, ultimately 70. I don't know when, and I can't tell you with absolute certainty when this will happen. I think a lot plays into this, and I am not in the right position to actually tell you when this will happen. So you just have to sit on your hands and wait for it. But you can see clearly from this Fibonacci pattern, we're approaching the 78.6, and which is the last point on the Fibonacci before we go higher. And if we respect that 78.6, then we could sink lower and take out 88.8. If I use the daily chart, so yeah, this is the daily chart. You can see clearly we also have the last channel before the rally. You can see we have this bounce. So we're looking for R2, $100 mark. And if we reject this level cleanly, and we have some significant momentum on the way down, so probably 5 bearish bars, and we get a break of this, then probably we'll have started the dollar reversal. But for now, I'm patient, and we also in the last quarter, so the last quarter we also tend to see the markets make some big moves as we advance into the next year. So probably I think we may get to 100 and get the reversal within this quarter, at least to start, not to take place, but maybe we may get a start of this move. So I'm really watching this one keenly. It's the best on my watch list currently, and I'm looking for that short trade, but I've not yet taken any position. I'm sitting, I'm waiting, but I wanted to share with you that outlook, and we'll keep you updated on how this one will play out. So that's it on the dollar, and I'll now go down to the next pair. Okay, so this is GBPAUD, and I decided to look at GBPAUD to show you the narrative on the pound. So as you look at this pair, try and understand that much of what will be happening on this pair is pegged on the performance of the pound, not the Australian dollar. So what is happening on the pound? So over the last probably a month or two, we've seen the pound make a recovery. Beginning of the year, we had pound trading up here 1.87, and we had a collapse all the way to the 1.76. Then we had now this slight recovery from 1.76, which was well. It developed in a very nice pattern of bounces of the trend line and a 3-drive pattern all the way to touch 1.84. After we touched 1.84, we had this slight drop, then we had this correction, and now we are moving lower again. So what do I expect of on the pound? Much of what is happening on this currency right now, especially the pound, is pegged on the outcome of Brexit, and there's a lot of uncertainty around that, and we don't try as Financial Lab to predict what will happen with politics and fundamentals and such things. We just look at charts and we try and understand what these charts are telling us about what is likely to happen. And currently what the charts are telling us is probably we may see a weaker pound, and a weaker pound. So if we get a break of this line, I'll assume this will be a correction, and A break of this line, probably I'll round it up to 1.80. We may get a false breakout, then we come back up. But a break of 1.80 and a break of this level 1.7850 means that we could see the GBPAUD move all the way to 1.7372. We know the deadline is almost close, so we have like 20 days to the deadline, and the pound is coming under strong pressure to move lower. So I think the pound is going to lose some weight here, especially if we don't get a deal. But if we get a deal, I think we may have some changes on this sentiment, and we may get a move back upwards on the pound. So for now, pound, I'm watching the charts and trying to understand what will be happening with Brexit, and I know that has a lot of impact on what will be happening on this chart. So if I go down to the 4-hour chart, currently I'm riding a short position on this one. From the 1 point, I came in here at P, and we're looking for this short to come in lower all the way to S2 1.81, 1.80 ultimately. So this was a good move all the way down to here. So we have approached actually the key levels that I was looking for, and now I think I'll be out on the pound. But as I've said, I'm looking for it to go lower, but I'll be looking for the patterns to develop before executing my setup. So 1.81, 1.80, 1.79 ultimately, before we decide the reversal to 1.73. But for now, we are short all the way to 1.79, and I think there was an article done on this some times back. So if you have subscribed to our site, I'm sure you got that set up and probably you made your money. So that's basically what I'll do on the charts today. I won't go through the other pairs like Euro USD or Euro Yen. For me, currently, I don't see anything solid on that, and I don't want to break down pairs just for the sake of breaking down. So that's briefly what I'll do on the technical setups, and hope you've learned a thing or two, hope you've enjoyed. And finally, make sure you share and invite your fellow Forex traders to come and watch some of these videos and get educated on how to go about trading the Forex market. So that's it. Have fun, enjoy, and make your pips. Goodbye.